We are rolling. So thank you for joining us. This is Matthew Struck with the Agents and Brokers Interest Group. We're an interest group within the CPCU Society. And we just wanted to get a couple of people together today in order to do a quick video call and put it out there regarding some of the ramifications within the insurance industry for the coronavirus COVID-19 pandemic that's happening currently. So I'm joined today by Lanie Clark at Parker Smith and Feek up in Washington State, which is one of the harder hit areas. I'm coming to you from New Jersey, which is probably like number 3 on the list at present. And then we have Bill Wilson, the author of When Words Collide, coming to us from, is that your home office in Tennessee? Is that right, Bill?
It is.
All right, fantastic. So we got a little bit of a cross-section of perspective here, which is good. Both myself and Lanie are coming from the ground floor retail broker perspective. Bill is more of I'd say a coverage expert nowadays in his second or third career in his life, which is fantastic. So that'll add some more substance here to the conversation. But so I want to kick it off really quickly, just kind of with, your short take on how things have progressed right now and, for you personally, from your perspective. So I'll give it to Lanie first. So how have things really kind of impacted you up there in Washington State in terms of your job and maybe even your everyday life?
Well, we do have our stay-at-home order that was put down on Monday and went into effect yesterday. They did 48 hours to, I guess, go out and hopefully not too much panic shopping. But and it is still reasonable. I believe we're going to be able to go to the grocery stores and get things that we need, but we're just supposed to stay home as much as we can. Definitely the traffic is great right now. My husband, he works servicing hot tubs and he's loving it. They're apparently going to, they've got an exception to be an essential service, so he's going to continue to work, which is fantastic. He doesn't interact much with people, so that's definitely an impact. I feel like that's clearing our air, which is nice, which is sort of an interesting side effect. I know I saw some pictures from NASA over China and how clear the air is after they were home for 2 or 3 weeks.
So, yeah, definitely.
Those are some interesting impacts that I feel like I'm seeing. Trying to get out every day and take a walk to get out of the house, because we're all work from home right now for at least our office is mandated until almost the end of April at this point. So,
and so from in a work from home situation, have you had that available to you in the past, and has it been somewhat of a seamless transition, or has there been some kind of big hurdles that have to be overcome in order to get the workforce up and running that way?
So yes, we've generally had it available. I was already worked from home 2 days a week. There were some people that, however, that were not set up yet, either new employees or employees that just chose not to work from home. So we've had to loan out some of our equipment, our computer hardware, to those folks on a temporary basis. Our IT department has had to expand our bandwidth, obviously, with everybody using the internet to log in instead of having access directly through work and through the hard lines. It's definitely been a little bit of a challenge. They've done a fantastic job. I have not seen a whole lot of interruptions, so
okay,
I'm thankful for them.
No, that's good. Adapt and overcome, right? The insurance industry, we're one of those industries that when everything hits the fan, we still technically have to work, right? So that's just kind of the nature of the business. So I'm glad you guys are kind of making things work over there. Bill, for you, I mean, you're living the semi-retired life, right? What's it like in Tennessee right now?
Well, it's like most places probably, and I've been working from a home office for over 20 years, so that aspect doesn't bother me at all. Probably the biggest changes affecting me personally are, I I'm in a band, and all of our gigs are canceled. We're looking at maybe doing some live Facebook streaming with a virtual tip jar. But that's probably the worst thing that's happened to me. That and rationing toilet paper.
Yeah.
I think that's we're looking at questions about insurance coverage. To me, the big question is, how in the heck did anybody think that they needed to confiscate every roll of toilet paper in the country?
Right.
So bizarre. I've been trying to do research, and I can't find any source of that information that you need to hoard toilet paper.
That is definitely the question of the month, I think, Bill.
It goes down as one of the greatest mysteries of humankind, perhaps in history.
I find it interesting. Not that we're not going to get political, because we're going to have a substantive conversation, so we're not going to get political. But I find it interesting that liquor stores are considered essential services nowadays, which I'm starting to come around to. I think the longer this lasts, that might have to be correct. But all right, so I think we kind of get the lay of the land. The first question is really kind of the 800-pound gorilla in the room, at least from the property and casualty side, right? The question is, and I've been starting to get more and more of these questions from my clients, but the question is, do I have coverage for any of this, right? A traditional property policy, I don't think the liability policy even really kind of creeps in here, maybe kind of indirectly or tangentially, but really for the most part, it's the property policy that a lot of companies have that have this business interruption coverage in it. And some of the clients have already begun to ask. Some of them are waiting for the smoke to clear in terms of what legislation comes out of Washington, and when the legislators get their act together and this bailout kind of finally passes, what it looks like in terms of the aids for the businesses that are out there. But Bill, from your perspective, you wrote, and here's another shameless plug. Definitely, if anyone's watching this and they haven't gotten one word collide, you should definitely get that. But on top of that, I think insurancecommentary.com, that you've been writing articles out of for some time now. You've thrown out a couple of really good ones within the last week and a half. But one of them really speaks to the BI, or the business interruption coverage component of this. Is there any wiggle room? I think most of the carriers are trying to push back on this, right?
Yeah, it's obviously it's being pushed by policyholder attorneys. Day before yesterday, I sat through a live video broadcast from an attorney that, and it all boils down to, what does the policy language say? I mean, that's why I wrote the book, When Words Collide. What does the policy, the specific wording of the policy in question actually say? And as you know, in reading the article that I blogged about, I was really responding to what's considered the first lawsuit alleging coverage for business income loss due to mainly to the government mandate. This happened, involved a restaurant in New Orleans, and the policyholder attorney representing the restaurant filed a lawsuit asking for a declaratory judgment from the district court about whether there was coverage or not. So I was able to get a copy of the actual policy, and it turns out it was a straight ISO CP 0030 business income form, the 2012 edition. And I watched the video broadcast where the attorney read the exact language and still didn't understand what it meant. I think sometimes but don't. I've been in the business for over 50 years now, and I have an idea, historical perspective, why policies are worded the way they are and how they originated and evolved and so forth. And
right.
Everyone's pretty much hanging their hat on the civil authority coverage and most business income forms. And when you read the language, it's clear that it was never designed for this kind of an occurrence. It was designed for hurricanes, tornadoes, where you have widespread damage. The government orders that people stay out of neighborhoods or business districts or whatever because of damage. You got power lines down, it's dangerous, etc. But there's some sort of direct physical damage involved. And in this case, the government orders are really to prevent the spread of disease. The ones that I've looked at, and I've looked at about 3 of them, including the ones from New Orleans, from the both state and mayor of New Orleans, they both mention property damage. And in fact, on one of them, I know where they got the language. It's from an attorney that told them they needed to include that to trigger business income coverage. But just saying it's property damage doesn't make it property damage. There's no evidence in any of these businesses that are shut down that there's any kind of virus contamination in those businesses. The idea is you shut down, you stop the traffic, and you keep the virus from being spread, either directly or from contact with a surface where the virus may be. But it's simply, when you look at the language, at least the ISO form, there simply is no coverage there, and wishful thinking won't make it appear, even though some government legislatures are trying to do just that.
Right. Yeah, and we can kind of get to the ramifications of that, the kind of the legislative, for lack of a better word, intrusion in terms of, what the coverage says and who gets paid for what claims here. But I think I've seen a number, or at least a handful of cases now that you mentioned, look, as retail brokers, and Lanie, you'll probably say the same thing, we try and frame claims when we put them in so that we're helping our clients get, any coverage that they can for that situation. Because especially in this case, many businesses are worried about their actual existence, not just some kind of financial impact. But I've seen a number of cases now that they've focused on that property damage aspect, and they're questioning, this goes back to the, what is the meaning of the word is, right? They're questioning what damage means. And for them, they're trying to hang their hat on, the virus is on surfaces and we have to, cleanse the surfaces, and we don't know if we could ever fully cleanse the surfaces of the virus in the interim. And that's why civil authority action happened. Do you think that, I think I know the answer, but do you see that going anywhere, Bill, or do you think they're just kind of like grasping at straws?
Well, it depends on the legal jurisdiction. There are some that have said that, to me, I wrote in my article that I believe direct physical damage means that there's been some alteration in the property itself. If you have an auto accident, you dent a fender, it doesn't magically undent itself. Or if you have a fire, charred wood doesn't become uncharred. There's some permanency involved to most property damage. And in the case of the coronavirus, you can either, in many cases, just wipe it away with a Clorox wipe, or if you do nothing, according to the experts right now, that it has a lifespan of maybe 3 days, 72 hours, which coincidentally happens to be the waiting period in most business income policies before coverage actually begins.
Right.
But I don't think it's truly physical damage, because it's just a temporary impairment. It's kind of like the impaired property exclusion in a CGL policy. Yeah. But there are jurisdictions that have held that if an occurrence results in the loss of use of property or the inability to occupy premises, then that is physical damage. To me, it's just bad law. I don't see it. In the industry, we usually refer to a loss of use as an indirect kind of loss, not a direct physical damage.
Right. Yeah, no, that all makes sense. At the end of the day, brokers work for their clients, right? So, or at least, independent brokers are out there trying to plug away for their clients, regardless of coverage. So we're going to do whatever we can in order to try and find coverage, right? To that effect, Lanie, with your client base, have they been asking? I would imagine they've been asking questions regarding coverage, or are they still just kind of hunkered down waiting to see what the world looks like when the smoke clears? I mean, what's your experience been with that?
Actually, I would say that almost, I don't know, anywhere from 80 to 90% of our clients, or at least our large real estate clients, have been asking. We have anything from apartment buildings where the tenants may not be able to pay their rent, to hotels and restaurants. And so we definitely have a wide span of exposures there.
Right.
We have sort of generally taken the stance that as long as the client agrees that we're filing claims, because as Bill kind of hinted at, each policy could be a little bit different. We're looking at civil authority. We're looking at attraction property in some cases also as being feasibly an area where some coverage might be. So we're just, our local IIABW, the Independent Insurance Agents and Brokers of Washington, actually laid down an email to all of us, clearly that we don't want to be the one saying that there's no coverage, if nothing else. So we're in process of filing claims on almost all of our policies right now, just to get the process started and to have the carriers make that determination.
Yeah.
I think it's been hinted too that some of the stimulus package coming down may require that you have a declination from your insurance carrier in order to move forward with obtaining that money as small businesses as well. So, or whatever size business you are. So there's a couple of reasons why we're doing that.
Yeah, that's a really good point. So I can say from my personal experience, our clients that were kind of the first claims that we're submitting, or the first wave here, are the claims where kind of the fallout is the most substantial. A lot of it is the hospitality stuff, right? So we have a handful of larger, bar, liquor, nightclub establishments, restaurants. All of them are operating at a loss, or they just completely shuttered their doors because, even if they stay open and they do takeout or something like that, they're never going to be able to make up for the overhead because that's just not hasn't been their profit model, right, in the past. So those have been the first wave of claims that we've put in. But to your point, that's actually really important. There could be a huge parallel here between, say, Hurricane Sandy and some of the other hurricane losses, Harvey down in Texas, where there's going to be a requirement for an insurance declination for some of this support to kick in, right? So I think the second wave of claims in at least our agency is going to be folks waiting to see what that stimulus package looks like, and then whether or not they do have to file a claim in order to be eligible for any of that money or that reimbursement. So yeah, that's a really good point. So now, Bill, you touched on this before, and I'll let you, I'll tee this one up for you. I live in one of the first states to entertain, legislatures entertaining the idea of trying to push insurance companies, or at least advise them that they should try and find some coverage here for the BI losses for businesses to help keep at the very least, the small and medium-sized businesses, in the economy afloat. I mean, say they did end up coming up with some kind of mandate, which I don't know if it would fly, but say if they did come up with some kind of mandate, what do you foresee as the fallout from that? I mean, that's not like just there's tons of money in the insurance industry and we can just write a check and nothing else, no other dominoes happen. I mean, from your standpoint, either financially or even coverage wise, what kind of Pandora's box does that open?
It's the last blog article that I posted on my website was about these mandatory legislative attempt mandate coverage where none exists. And there's quite a few articles, actually, at least several articles on the internet from attorneys about this that have some understanding of constitutional law, and most of the ones that I've read indicate that that's probably a violation of Article 10 of the Constitution, prohibits states from doing anything that would interfere with private contracts. And one of the articles was really a good one, who pointed out that the Supreme Court has looked at this. They have a three-phase decision-making type of consideration of whether it actually does violate the law. I think the latest case that the Supreme Court, the U.S. court, reviewed was in 2018, and they found that for a state to do that legally, they have to demonstrate that it doesn't significantly interfere with the contract itself, which clearly isn't the case where you're telling insurance companies they have to pay for something that the contract clearly doesn't cover, that they never received any premium for. And the other issue, too, is that I read an article, I haven't tried to figure out if it's true, that if you look at the net assets of the insurance industry, that there's not enough money there to cover potentially all the costs that are going to be involved. And if there was, you would basically bankrupt just about the insurance company, at least the ones that are writing business income coverage.
Yep.
So it's just not practical. And the other side of this, too, is that if you could get money from the industry, then it's going to take away from the funds they have to pay people whose premiums are actually paid for the claims that they might have. There aren't any guarantee funds that are able to withstand assessments if most of the insurance companies are insolvent or close to it. So I understand why legislators are trying to look for every pocket that they can put their hand in to try to help people. But as someone else posted on LinkedIn, why not just make banks start paying for it, or really any business? I think in my article I mentioned a bunch of other types of businesses that just because the word insurance is involved doesn't mean that the insurance industry should be expected to fund all of this.
Right. Yeah. No, it's I agree with you. I think the course of action moving forward, whether it's posturing or whether they think there's a legitimate chance that some of this will stick, I think that the course of action moving forward is probably going to be some level of, FEMA type disaster aid, where once these kind of like zero interest or forgivable loans cycle through the system, the net income losses, and I think a lot of people should remember that the details of the stimulus package that are being kicked around right now, or hopefully maybe finalized within the next day or two, really focus on workers, right? They focus on payrolls and maybe some baseline expenses in order to, pay landlords or keep the lights on, so to speak. It doesn't talk about profit, right? Net income coverage or business interruption coverage in the traditional property policy is meant to make the business owner whole with respect to the way that they expected their business would have panned out over the next, whatever the coverage period is, 6, 12, 24 months, right? I don't think that's being contemplated by any of the stuff that's coming out of Washington, D.C. So that's going to be something to watch down the line. But let me kick it back to Lanie in terms of, with your client base, have they been, what have they tried to do in order to kind of mitigate the business interruption loss? Do you have some either innovative business practices or any of them engaging in new business practices that they hadn't in the past, just to try and keep the flow of income, close to what it was?
Sure. Yeah, I think the biggest thing that we're seeing is with restaurants that normally don't deliver, offering up delivery in the interim, which of course has its own exposures and sort of coverage concerns.
Right.
Although I heard back to the mandates from the government, I read a story this morning that I think it's in Texas. They're possibly trying to make the insurance companies cover if a personal policy has a loss and that person was driving delivery. They're trying to mandate that be covered even if it's excluded in the policy. So we'll see how that goes.
Mm-hmm.
I have a client who is actually a disaster response company, and so they are going to be setting up apparently some camps for COVID response, which has been an interesting, work comp concern. for their employees, because they're obviously exposing them to something that feasibly could be deadly, although these folks also go fight wildland fires. So I suppose they're kind of used to that.
Yeah, pick your poison, right?
So,
yeah.
Yeah, exactly.
Yeah.
You know, I have a client that's a housing authority, and they are actually using their vans. They're driving around and delivering food to some of their tenants. They have a restaurant that donated a bunch of food. So it's, you know, it's similar kind of delivery type situation.
Yep.
Trying to make sure that their goodwill and their tenants are taken care of during this time, this tough time. Yep. Yeah, that's probably the biggest thing that's happening right now.
Yeah.
We're going to start having some concerns about vacancy. If locations sit vacant for too long, we do usually have the 60 days on the ISO form, so we have a little bit of time, but that could be a problem.
Yeah.
Because I know we already have one client that has a hotel shut down because they just went down to like 3% occupancy and decided they couldn't afford to keep it running.
Yeah, let's just dig into that for a second, because that's a really good point. I don't think a lot of people have thought about or talked about outside of, you know, maybe if you do have a lot of property-related clients or property management-related clients, you know, within a lot of these property policies, if you have a certain level of vacancy or if you have a certain unit that's vacant for a period of time, your coverage can either be dramatically restricted or not apply, right? And so I think that might be one of the areas where it might make a little bit more sense for if carriers aren't amenable to relaxing those requirements within the contract. I think that might be make a little bit more sense in terms of legislative, you know, input to try and push a little bit of leniency in that arena. But yeah, I think that's interesting. That's something that I don't think I've seen a ton of people talk about just yet. But I think that's also because, you know, like you said, I mean, Washington, you guys have had a shelter in place or just enacted, right? I mean, New Jersey's essentially been shelter in place, you know, like about a week now. But, you know, more states are probably going to end up adopting this policy. And as that happens, and as the flow of tenants kind of gets shunted, you're going to see a number of properties that sit for a while that don't end up getting populated. So now you're going to end up with potential coverage gaps where, you know, all things normal wouldn't have resulted. So that's a really good point. All right. So my next here is in terms of, you know, these new business exposures. And you had mentioned it, the you know, the employee that was used to work behind the counter and now they're driving delivery or something like that. I think, Bill, you recently published an article on insurancecommentary.com as far as the personal lines impact, right? I think that's a big one. Were there any other ones, or what do you foresee as the biggest kind of additional issues that are coming out of, you know, businesses just trying to find new or other ways in order to generate revenue streams?
It's kind of tied in the whole issue about mandating stuff. You know, I wrote a blog article that initiated the personal lines article about, you know, what can carriers actually do voluntarily, and I suggested one that prompted that personal lines article is that they could many auto insurers exclude delivery, some specifically food delivery, others other kinds of delivery. I just to give them a plug, I just saw a couple of days ago that Progressive announced that through, I think, at least April the 9th, they may extend it, that they would not enforce their delivery exclusion. And I suggested that that was a possibility that wouldn't financially imperil companies because there's so much less driving going on right now that probably their loss experience is going to decline, and it might be offset by people that are delivering stuff that they could normally exclude but have decided not to exclude. I did suggest that they do it by an endorsement and not just a statement. I think it's important to recognize that we're dealing with contracts. If you're going to change a contract, you should do it in the proper way. And with insurance, that means filing an endorsement or issuing an endorsement and copying the insurance department. I read yesterday that Wisconsin had mandated that insurers, personal auto insurers, cover delivery, whether their policies covered that or not, and that businesses with CGL policies be required to cover the hired and non-owned auto exposure. And to me, that's wrong. Once again, mandating that, you're effectively trying to modify a private contract by a governmental order, which again a lot of attorneys think is unconstitutional. And not only that, if somebody has a CGL policy that doesn't cover hired and non-owned, how can you say that you have to cover that without adding actual policy language? You know, the policy determines what's covered, what's not covered, etc. Just saying you have to cover hired and non-owned, there's no guidance from any kind of contract language of how you actually determine valuation and so forth. So these are just kind of some harebrained schemes that are cropping up.
Yep.
And I like the idea that some companies hopefully are going to do this voluntarily, but they need to do it the right way. And other than that, I think Lane was saying about businesses starting to look at innovative and different ways of delivering their services, like with restaurants now providing deliveries. They're taking servers who would be without a job and converting them into delivery people and trying to compensate them at least in some way. So I think you'll see things like that. But other than that, I would just be guessing at what businesses may make.
Yeah. You know, it's also an interesting issue here. We've had a couple of clients take that route where, now they're predominantly takeout or delivery, where they used to be, in place dining. And one of the biggest problems is from the risk management standpoint, right? Your drivers, you typically want to make sure that they're responsible drivers. You're not exactly pulling MVR, like motor vehicle reports or record reports, on your servers, right? That doesn't necessarily tell you whether or not, someone's had a couple of reckless driving tickets or something like that in the past. So you're now transitioning a server to someone who's driving for work. And to boot on top of that, it would be nice if just in quick you could hustle up and pull an MVR on someone just to make sure that they're a responsible driver now doing delivery. But you've also had, the DMVs impacted by this as well. So you're not exactly able to go through a full risk management process on these new operations. So I think it's a buyer beware, or it's a kind of like you try and you're shooting from the hip, but you try and do as much as you can in order to do it responsibly. So hopefully a lot of brokers out there are advising their clients that even if they can't pull an MVR, that they're at least reasonably expectant that those people that are doing deliveries are going to be responsible drivers and not acting like some crazy people out there on the roadways. Luckily enough, there's not as many people out on the roadways, which I'm pretty sure the personal lines auto markets are absolutely thrilled about currently, because they had some issues in the past. But we could fill an entire video about that as well. All right, so the downstream question here is specific to BI and some of these other issues that we've discussed. What do you think the insurance environment looks like 6, 12, 18, 24 months out from this, right? What are going to be some of the impacts in terms of, the policy copy or the coverage forms that are available, and then, what the possible solutions are if insurance companies double down on trying to, close up these loopholes within the policy or affirm their lack of coverage for these types of environments. I'll throw this at Bill first. I mean, what do you see? I think there's already been a couple of ISO endorsements that have been contemplated as far as this goes, right?
Yeah. They provided a couple of advisory forms. I don't believe they even filed them with insurance departments, as far as I know. They may have. They had to, but there were forms to provide coverage. I don't see a lot of companies wanting to provide coverage for a potentially catastrophic loss. I mean, companies by and large don't want to cover flood, and I've never heard of a flood that floods the entire United States before. Well, biblically, possibly, but I see companies wanting to cover this. It's like unemployment compensation. There's just no way that private industry can cover something that could become catastrophic if there was a full-fledged depression.
Right.
So I don't see companies being eager to do this. What I do see them doing is anyone that doesn't have a viral or pandemic type of exclusion, they're probably going to start adding those exclusions unless regulators prohibit them from doing that. So,
yeah.
So other than that, I don't. It really depends on what happens over the coming months with dealing with government mandates and loss experience and what the courts say. And this could take years to ultimately resolve, and it's going to vary from one jurisdiction to another. If you have a legal jurisdiction where they're saying that these kinds of things are covered or have to be covered, then I think you're going to see a lot of carriers leaving those markets.
Right. Yeah. I mean, if you could look at your crystal ball, Lanie, do you kind of see something similar? Do you think it's going to be either a more restricted environment, or, I mean, I think we were already kind of hedging on or verging on hard market conditions. What do you think this does to rates going forward?
Well, we already addressed the fact that probably most of these claims are not going to be covered. So I'm not real sure that it's going to affect rates, honestly, because it's not like something where we're going to have to pay out a bunch of money,
right,
unless the legislation comes down and somehow succeeds in requiring the carriers to do so.
Right.
Personally, I feel like it might follow the path of our terrorism TRIA, exposures that we've had to deal with for the last since 9/11.
Yeah.
Even though there's been no certified act of terrorism, we still have to get TRIA forms signed. If somebody doesn't want to pay for the coverage.
Right.
So I don't know how the rates would be developed for that, to even offer the coverage. I know we did have one carrier that indicated they were working on a program to offer the coverage, specifically some sort of pandemic coverage that people could buy. But again, how often does this sort of thing happen? It's one of those things where people are going to freak out for a while and then realize that it'd be great to have covered what we could cover, but this sort of thing just doesn't happen enough to warrant a whole program or paying premiums.
Right.
In my opinion.
So there was one, I've had a number of conversations recently with some folks who kind of live in this in-between space called parametric insurance, right? Parametric insurance is not anything new. It's just not that widespread. And I think it's for the reason that you mentioned. Parametric insurance is really valuable when it comes to these kind of black swan type events where the premiums are somewhat reasonable and you're insuring against these improbable type losses. But the reason why you end up paying the premium is because these are not just annoyance type claims, right? These are claims that legitimately threaten the existence of your organization or your business. There are a perfect example would be, I don't know, I mean, you guys get snow up in Washington. You guys sell snow plowing cover for homeowners association and things like that?
Oh, I don't know. I don't really write a lot of homeowners associations, so.
Okay, yeah,
Sure.
we have a couple of homeowners associations where we've talked to them about it, and it's the minority of them are interested in it, but it's basically a parametric trigger where, as opposed to having to have physical damage or debating whether or not there was civil authority based off of this or that, it uses pretty defined terms, and it's more on a straight indemnity policy kind of reimbursement structure. So, snowplow being one of those examples where it's like, if it snows, X number of inches during these months as measured by this is the payout. And so the value is that, say you're a homeowners association, you're getting some kind of money to cover potentially a budget gap or a budget overrun that has resulted from an unscheduled or unseen, harsh winter. I could see parametric being somewhat of a solution here. But again, to your point, I think it's it's a black swan kind of situation. Like, not very many people sit around their living room every single day and think about, what's the one thing that has a 1 in a million shot that could happen that could, end up derailing my business or derailing my life as I know it. Have you heard very much about that, Bill? Parametric cover in terms of these types of events, these once in a generation, or maybe even more frequently than that, but just kind of the gigantic magnitude type events that are out there?
I've read a little bit about it in the past, but I really don't know a whole lot about it, and I've not seen anything lately that makes the connection between that and what's going on right now. It probably is one, but I've just not seen anything on it. I did want to mention, Matthew, that one of the results I think of what we're witnessing that's kind of positive is that we're really hopefully starting to understand that there's more to risk management than insurance.
Right.
That insurance is not the only way to manage risk, and we're seeing that with the social distancing is one form of what we call exposure segregation, where you separate your exposures to minimize the chance that they'll suffer injury or damage or the severity of it. So, loss prevention, sneezing in the elbow, and other kinds of things we're starting to see may be as important or more important than the insurance side of it. And hopefully, this may drive for the institute's people to pursue the ARM designation to learn more than just selling insurance.
Yep. Yeah. No, that's an awesome point. I can personally say that the CPCU has really helped me be a little bit more of an educated broker when it comes to situations like this. I'm sure, Lanie, you can echo this. Your clients, especially when they're worried or concerned in these type of situations, there's tons of hypotheticals that get thrown out. There's tons of what ifs that you're trying to address, at least in terms of whether or not there's reasonably going to be coverage, or whether or not there's going to be other kinds of options, like Bill mentioned, in terms of the risk management. And I can echo his push for folks that are in the brokerage world to get the associate in risk management designation or certification, because that's really helped in a lot of cases too. Because insurance isn't able to cover everything. It's it would be way too expensive if you tried to write a policy that covered every single type of loss that could possibly happen, and thus it wouldn't be feasible. So there are some risk management techniques out there that can be used to lessen the overall cost of the insurance that's in place, and also do a better job of kind of keeping the possibility of a business running or an organization in place. So, all right. So if you might be able to hear in the background, all hell's breaking loose because my family has now figured that our recording is almost about done. So I think it's a good exit here. I want to thank both of you. I appreciate your ability to take some time out during this very hectic time and to log on and your insights. A reminder to anyone watching, if you have the opportunity, if you're an insurance and risk management professional, check out the CPCU Society, check out the CPCU designation, and make sure to link up with the Agents and Brokers Interest Group on social media